Alright guys, so in this video, you're going to learn exactly what to look for when price is retesting a broken horizontal or diagonal level. So, if we're giving context to everything, remember that we want to find a clear direction, we want price to be moving upwards, for example, and then to break above a previous area where it has found resistance at. And after it breaks above that level, you want it to come back to this level. You want it to retest and start bouncing, and then the idea would be to take your trade here as on a buy. Stop loss goes below the area and target goes somewhere above. However, what about this little part right here where we're looking for, well, what do we want to see when it bounces? What does that mean? It's bouncing away. So let's go to the actual charts and show you some examples. So if I've identified this trend line right here, right, and price rejected there, and then it came up and bounced a little bit higher, and then right here. So at that point, we have an established like trend, right? Because price has reacted like there. It's very clearly, by all accounts, if you just connect all the lows, it's simply an uptrend. And so what you want to see is whenever price breaks horizontal levels and comes to retest areas like this uptrend and horizontal support areas, what you want to see is something very simple. To put it simply, here on the 4-hour chart and the daily chart, you just want to see a wick. And what does this mean? Let's examine this. Whenever candlesticks are being painted, they start just like this. And since the candlesticks start like this in the chart, if the price within this, let's just say it's the 4-hour chart. During a 4-hour time period, price may move, up all the way to here, and then price may move down to here, and then price may come up and then finish right here before the next candlestick is open. So if we were going to break this down into what this candlestick does, if the price of this candlestick had opened right here, it's going to start with just like looking like this. And then if price had gone all the way up to here and then dropped, what we would see is that price would move all the way. This is how it would look when it was open. Price would move all the way up there like that, so the candlestick would look like that on the chart. And then, right after that, it would have dropped down here. So then what's going to happen is it's going to leave this thing on the top, and we just call that a wick. We call that a wick. You can call it a pin bar. You can call it a price, like a tail, like the candle tails or whatever. I just call it wicks generally. And price will just leave a wick, signifying that, hey, when the price was up there, it would have been like a full, like just like black or white candle or whatever layout it is, it'll be like, this right here, just like a full colored in candle. But after, say that price goes up to the area but then quickly falls down within the same time period, which in this case the same 4-hour period, price would go down here. And then when price was down there, the candle would have looked something like this, right? So and it would have been all shaded like that. But then what happened is price ended up coming up to here, and then this is where the candle closed at before the next 4-hour period begins, and the next 4-hour candle goes and paints this. But let's break this down another step. Since price had gone up there and then quickly fell, it left a wick right there. And price fell past where the candle opened and then went down here, but then it went up a little bit. So what would happen is this candlestick, price would close right here at this area. So it would close up there, and it will have left a wick to the downside, to wherever the lowest part of the candle was. And the candlestick, when it's all said and done, will look like this, and it will be left on the chart. So this is in theory. Let's go look at the actual applicational side of it. Let's take this candle, for example. Now, all we see right here is we see a small part of the candlestick, and then we see this huge like wick right here, right? This huge wick that just went all the way down there and then quickly got pushed up. Let's look at the dynamics of what would have happened when that candlestick was open. So the candle would have opened, and then the price would have gone down rapidly. So at one point in time when that candlestick was open, that would have been a full solid candle. And in this case, it would have been white. So I'll just leave it as white because my chart, the candles are white. So whenever this price was open down there during that 4-hour time period, because we're here in the 240 chart, which is the 4-hour chart, when that candle was open, maybe 1 hour or 2 hours or 3 hours into the candle, just while this time period was open, while that candle was open, price would have been all the way down there, and the candle would have looked like this at one point in time, just a big white candle. And then what happened is Price now closed and it left the candle looking like that before price continued upwards. However, the reason price is left like that is because maybe let's just say like, this candle opened at 4 p.m. and price went all the way down there. And then what happened at maybe like 5 or 6 p.m., price was further up, and so it leaves a tail, and then it leaves something like that. And then let's just say this is 6 p.m., and then let's say at 7 p.m., 1 hour later, price starts aggressively going up. So then price is like up here, and it has left this huge tail on the candle, this huge wick. Of course, it's going to be straight. But price will leave this huge wick all the way down with the lowest price it was. And then come 8 p.m., price ends up closing right there at that area, having left this huge wick to the downside. And then the next candle starts, going up, and then the next candlestick is born, and then that life of the candlestick progresses. And this happens over and over and over. But look at this candlestick right here. Whoa. Look at this candlestick right here, and then look at this one here in the chart. They're the exact same, except this one has a little bit of a wick on the top, which just means price went up there before falling a little bit and closing right there. But the fact that it left this huge wick, I want you to understand what that signifies. That signifies that for some reason, if price is like, going sideways and slowly coming to a level, but let's just say this is like a certain price right there, and price gets down to this area, this price point, if it quickly bounces at that area, the way it's going to look on a candlestick chart is it's going to leave a wick like that. If price rejects the area very quickly, very aggressively, very rapidly, it's going to leave a wick. And then what may happen is, price may like go past the level and then quickly come right back up. So in that case, what it will look like is it'll look like, a candle like that with a body up here, but the candle will have a tail that goes all the way down below the level before quickly getting pushed back up, and the candlestick closes, somewhere up in here, leaving a candle that's painted like that. And then maybe the next candle will be something like, it goes up. And this next candle forms, maybe price goes all the way down here, but then quickly pops up, and then it goes all the way up here, but then quickly comes down, and then it leaves like a candlestick like that on the chart with like a tail on the top and the bottom. So the reason candlesticks do this is because price opens and the candle makes its moves and goes up and down, and then price closes and it leaves you with some information on the chart. Then the next candlestick happens, and this goes so on and so forth. So here's a takeaway by seeing price action like that, is that if this type of price action, which is essentially just saying what is price doing, that's all price action is, like the action of price at a particular level. If price does that along very clearly defined trend levels, it's very likely that price is going to try to reject that if that area is significant enough and if we have all the right confluence. Such as just looking at a random candlestick like that in the middle of nowhere doesn't have a lot of information, it doesn't give us much relevance, and it's not that useful. But looking for candlesticks like this to form at very, very significant levels, for instance, if this was like an uptrend and price had like broken above this area, and it was previously resistance, so price had come up and it tried, once and then twice and then 3 times to get past. Then it broke above this area, came back and retested, and then left a candlestick like that at this previous, resistance area, which is now acting as support, along with the uptrend area. And then it starts making higher highs and candles are going up. It's very likely this market's probably going to try to keep going up as long as the trend is clear enough and as long as it's clearly broken above the previous resistance area and tested as support. And what does this come down to? Well, it's very simple. Price will be going up in an uptrend and it'll keep going up and up, break above resistance, come back, test as support. All you're looking for is to see those kind of candles form on the retest. So it can like bounce, once, it can bounce twice. You can look at this on the 4-hour chart or on the daily chart. If you do go to the 1-hour chart, which I don't really recommend, and I don't really do it all too much, every now and then I'll dip in. But if you do go to the 1-hour chart, the only thing you should be looking for in the 1-hour chart is simply wicks, candlesticks and wicks forming at 4-hour and daily levels. That's it. You should not be drawing any levels in the H1. You shouldn't be doing anything else except quickly jumping in. And for instance, if we're looking at this trade right here, you see this right here? All you're looking for is like candlesticks that are bouncing. Stuff like this, wicks and pin bars. Stuff like this right here, wicks and wicks. If you had drawn a trend line starting from right there and connected all those and extended it into the future, when price came there in the future, you could have looked to take a trade right there. Now, I don't know how clear if this is as a horizontal support resistance area, because the only other thing that we have right there is like, maybe like, I don't know, like these highs. But even then, that's not so clear. So the only thing you would have had was an uptrend zone. So that wouldn't have been, you know, something that I would have necessarily taken. However, we did have price after it rejected the uptrend. It broke these highs right here. And so if you're just saying like, hey, that's a previous resistance area right there, price came here in the future and started respecting that, and then look what happened. Price started bouncing with like a wick, with a really strong wick, with a couple of wicks trying to bounce right there and going up, and then right here, price rejected with a wick and then went up, ended up going and making like higher highs and stuff. And so that being said, all you're looking for is whenever price comes back to retest the broken support or resistance areas along with its trends, all you're looking for, I'm really trying to stop being a 10-year-old with these drawings. All you're looking for is price to come back to those areas and start bouncing with like wicks. And 4-hour chart is the best. If you go to the 1 hour, only do it to like look for these type of wicks like that. And then if you're going below the 1 hour chart, you're pretty much asking for trouble. I don't do it if I have students who are profitable doing that, but if you're starting out, it is completely useless to go to a lower time frame and try to make trading decisions, because at the end of the day, just like I go over earlier in the course, if you're going to these lower time frames, your decisions are still going to have to be based off the daily and 4 hour. You're still going to have to be looking at those levels anyway to make your trading decisions on those levels, so that you make sure that you're placing your targets and stops in appropriate areas and understanding what's going on in the daily time frame to then trade the lower areas. It requires more work, it's more time investment, it's more volatile, it's more difficult, it's just a lot harder, and it's way more complex than just keeping things simple and sticking to the daily and H4. So just stick to the daily and H4. It's super plain and simple. It's super peaceful. I have a hard time throwing the word easy out there, but after you get the hang of it, it is easy here on the 4 hour and daily chart compared to doing it on the lower time frames. Another thing, let's look at this right here. You see these previous support, you know, once, twice, then price broke below it, came up, resistance, bounce, resistance, bounce, resistance, bounced. And if we drag this up to the tip top where these wicks are going, look at how aggressively price goes up into the area and then falls away. Look at how aggressively price goes up all the way there and then quickly falls away. For example, when this candle was open, it would have looked like this. There would have been like a candle body all the way up there at the top. That's how, so it won't let me put it exactly, but it would have looked like a solid candle. But then price quickly got rejected and pulled back, leaving that wick right there. The same exact thing happened for this over here. If we're breaking down the action of this candle, the price action of this candle, the candle would have been all the way up there at some point during that 4 hour period, because this is still the 4 hour chart. So during this 4 hours, when this candlestick was open and price was open at that moment, the candle would have looked like that at one point. Like it would have been like a full bar up there. But price got rejected from that area, and so aggressively that it quickly fell all the way back down to here before going lower and then leaving a candle body like that, leaving this long tail right here, this long wick. That wick gives you a lot of information if it is at a very significant area, like a support resistance zone or a diagonal trend line zone. So to put it simple, I used to have a whole section on price action in my program. I may still include one at some point, but what I found is that you don't really need to know all these technical things and all this crazy like excessive stuff about candlesticks and price action. All you need to know is that whenever price, for instance, in a downtrend is, you know, making lows of support, breaking that area, coming up to retest it as resistance, all you need to know is whenever you're looking to take your trades within a clear direction and a clear break and retest of horizontal level, all you're looking for is just literally like one wick, maybe two, maybe three on the 4 hour and the daily charts. That's it. As long as you can see like a wick form and then price starts going down away from it, that gives you enough information. Like price is in a downtrend, that's one reason to sell. Price has broken previous lows, that's another reason to sell. Price has come up and retested those lows and then is bouncing away with a huge wick. That's another reason to sell. Price is respecting its downtrend zone and bouncing away from the downtrend zone with a wick. That's another sell. So when you put all the confluence together and you see stuff like that, that's where you get your entries. You could like place a sell position right there, you know, maybe a target at the previous low and a stop loss, you know, above maybe these highs and above the downtrend area, above this horizontal level. And that's it. You're entering there. You want to target lower and a stop above that area. So keep it very simple, guys. All you're looking for is these pin bars at significant levels. It doesn't have to be complicated. It doesn't have to be anything specific. All you want to do is you want to see a couple wicks forming at the levels that you're looking to sell at or buy at. I'm trying to see if there's any more examples. Let me give you an example of 2 trades that I took today that I'm currently in right now. So here on the daily chart, for one, this market is in an uptrend, GBP Australian dollar. So the market is going upwards right now. It's in a clear upwards direction. And so price came to this level and started bouncing and slowly started going upwards. Price started bouncing upwards and here again, and then a third time started going up, broke above this previous high right here, came back, tested as support, kept testing, kept bouncing along this support zone, bounced along the uptrend. So after price kept bouncing here over and over, I made the decision, I'm like, hey, there's wicks here, there's wicks here, there's a wick here, there's wicks here. I made the decision to say, okay, it looks like price is bouncing along this zone and respecting. So all things considered, price is bouncing along in an uptrend, and now it's bouncing along this this uptrend zone right here, broke a previous high, tested as support, and then kept bouncing again. And I had some students say that this was like a horizontal zone. I didn't really see it, especially if you drag it up there. I don't know, it just doesn't look that clear to me, so I didn't have that on my chart. I worked with a lot more of the recent price action here, which was like there was this high that was formed right here. Price had bounced, then got above that high, tested as support, and started bouncing, kept bouncing over and over. An entry anywhere in here at that time would have been fine, anytime. I just waited until it bounced along the uptrend again. You're never going to be able to be too exact with these trades about exactly what you're going to see happen every single freaking time. Like every single trade is going to turn out slightly different, and that's what the 2-month demo practice period is for at the end of this program, is testing the stuff. Like learning, seeing what happens in the market live, remembering what seems to work best, remembering what doesn't work as well. And so I took this trade, but what was this? Is simply a break and retest of this horizontal level during an uptrend. And I used these price action wicks to just see what price was doing at that level. Looking at what price action is doing at somewhere random, like in here or going sideways in here, that doesn't really matter. All you're looking for is to draw your daily and 4-hour levels, like trend lines and then horizontal zones, and then you just simply wait, you just chill, wait for price to get there, and then you see that price action at those levels. Another trade I took was this GBP JPY trade. Price is in an uptrend. I went ahead and just drew 2 trend lines in here just to be safe. So I have this trend line here connecting that low to this low, because the price comes in the future, it might reject that area. And I also have it connecting that low and then all of these other cluster of lows in here. And what we have is price reacting there, here, broke below, came back, broke above, back into the uptrend, came to this horizontal level where it was previously resistance and tested as support. If price is just going to simply continue its uptrend, it's going to do it at some point, and if I'm wrong, it'll come and stop me out. But I entered this trade after the rejection on the break and retest of this horizontal zone during this uptrend. It was a break and retest of horizontal zone during an uptrend. My stop loss is simply below the uptrend area, below the horizontal zone, and my target's higher. Both of these are in profit. And at this time, it's up like $900 right now on this new account that I started. But earlier today, it was at 404. Last night before I went to bed, it was at negative 236. I sent the trades out. This is when I called them. So I called these yesterday. I am long on GBP AUD. That's what it looked like the moment that I entered. See, I just saw some pin bars, some wicks, price broke above the area, came and retested, and I chose to go long. And this right here, GBP JPY. See what price did right here? Like uptrend zone, price broke above, came and retested this horizontal zone. And you see how it was leaving those wicks right there here on the H4 chart? That's why I chose to enter this trade. This price had broken above and retested a horizontal zone during a clear uptrend. Stop loss below the area and a target significantly higher. And both of those trades are going good now. So that being said, this covers exactly what you should look for whenever you are looking to trade breaks and retests during a horizontal zone. So I will see you guys in the next course, the next lecture. Cheers.